Every 4 years, Bitcoin crashes 70%, 80%, 3 times in a row. The pattern made millionaires, and right now, billions of dollars are sitting on the sidelines waiting for it to repeat. It won't. And every week spent waiting for a crash that's already behind us is a week paying more for the same Bitcoin. I'm David. I spent years at the world's largest Bitcoin security company, and now I help professionals and retirees protect and grow their wealth with Bitcoin. In this video, I'm going to show you 3 things. Why the crash the 4-year cycle promised already happened and looked nothing like the last 3. Why the coins have already changed hands from weak holders to strong ones 6 months ahead of schedule, and why the force that actually drove every Bitcoin cycle just flipped, setting up what could be Bitcoin's biggest move yet. Let's get into it. The 4-year cycle has been Bitcoin's most reliable pattern. After every halving, the event every 4 years that cuts Bitcoin's new supply in half, the price explodes. Then it crashes 70 to 80% and starts again. 3 times in a row, every cycle minted millionaires on the way up and destroyed them on the way down. The last peak was 126,000. If the pattern holds, the next bottom is somewhere around 30,000. That's the number most sideline investors are waiting for. And it's wrong. On February 6th, Bitcoin touched $60,000, a 52% drop from the peak, not 75. And on that single day, the largest realized loss event in Bitcoin's history played out, bigger than the FTX collapse, bigger than the sell-off that marked the last cycle's floor. The weekly RSI, a momentum indicator traders use to measure whether an asset is overbought or oversold, hit an all-time low. The 200-week moving average, the level institutional analysts use to identify deep value in any asset, was tagged exactly. Every mechanical signal that has marked the floor of every prior Bitcoin bear market fired on the same day, at 52%, not 75%. The 4-year cycle got the magnitude wrong by 25 percentage points, and the floor signals fired anyway. That's not a minor miss, that's the pattern breaking in real time. But there's something else the cycle got wrong that most people haven't noticed. 2025 was the post-halving year, the year that's supposed to be the strongest of the entire cycle. Every post-halving year in Bitcoin's history has been massively positive. Every single one, until 2025. For the first time ever, the post-halving year finished negative. The most reliable signal in the 4-year cycle already failed. And if the most predictable part of the pattern broke, the rest of the pattern is built on a foundation that no longer exists. If you're not interested in watching charts all day or following price predictions, and you'd rather just build long-term wealth with Bitcoin the right way, the link in the description is where to start. But a crash alone doesn't make a bottom. Prices can always fall further. Bear markets end when something specific happens underneath the price. A transfer that doesn't show up on any price chart, and the data says that transfer is already done. There's a difference between a real bottom and a temporary bounce that fools people into buying before the next leg down. On a price chart, they look identical, and if an investor can't tell which one they're looking at, they're guessing. Most people have no way to tell. On-chain data can. It's the publicly visible record of every transaction on the Bitcoin network, and since January, over 2 million Bitcoin have changed hands, from buyers who paid above $80,000 to new holders between $60,000 and $80,000. The vast majority of sellers this year were top buyers, capitulating at a loss. The patient long-term holders, the ones with a cost basis well below $60,000, are barely selling at all. They're absorbing. And here's the number that ties it together. In both the 2018 and 2022 bear markets, the floor was confirmed when roughly 25% of all the capital invested in Bitcoin concentrated in the bottom price range. As of mid-April, we were at 23.7% and rising every week. According to the 4-year cycle, 2026 is supposed to be the deep bear year, the equivalent of 2014, 2018, and 2022. Every one of those years saw devastating drawdowns. The capitulation was supposed to happen in the second half of this year. Instead, the mechanical work of the bear is essentially done. 6 months ahead of the schedule that billions of dollars of sideline capital is still following. The 4-year cycle isn't wrong about what needs to happen for a bear to end. It's wrong about when. So the crash came early. The redistribution came early. The question is why? And what does it mean for what comes next? If Bitcoin followed the 4-year cycle, the last run from 60,000 to 126,000 was the bull market. And what's happening now is the bear. But something about the last 3 years didn't fit. The ETFs launched, institutions entered, and the whole thing still felt muted, like something was holding it back. Something was. There's an indicator called the Purchasing Managers Index, or PMI. It measures whether the global business cycle is expanding or contracting. Above 50 is expansion, below 50 is contraction. When the economy is expanding, businesses invest, banks add liquidity, and risk assets like Bitcoin attract money. When it's contracting, capital retreats. Every Bitcoin bull market in history ran with PMI well above 50. Every single one, except the last cycle. PMI stayed below 50 for the entire run, the longest contractionary streak since the index was created after World War II. Bitcoin went from 60,000 to 126,000 against a global economic headwind and still only corrected 52%. Nothing like the crashes that mark a true cycle ending. But 4 months ago, PMI flipped above 50 and it's rising. Bitcoin has done double peaks before. The first peak hits resistance, corrects, and the second peak with the macro aligned goes significantly higher. Add to that, one company alone, Strategy, is now buying over double the daily output of every Bitcoin miner on Earth. The supply shock the halving was supposed to create is mathematically irrelevant when a single buyer dwarfs total issuance. The picture that's forming is not a bear market. It's a mid-cycle correction inside a larger move. Look at the year-by-year returns and the pattern is clear. Strong positive years, a shallow correction, and now a macro tailwind that didn't exist during the first leg up. The last time all of those conditions came together at the same time in Bitcoin's history was never. This setup is new, and that sideline capital is still waiting for the 4-year cycle to deliver a $30,000 entry. They're following a compass that's pointing in the wrong direction. I believe the opportunity in front of us is unprecedented, but it takes serious investors who take action. So if you want to secure your future and own Bitcoin with confidence, click the link in the description to see how I can help you reach your goals. Now, if the old pattern is breaking, what replaces it? There's a signal the smart money actually follows to know where Bitcoin is heading. It's one simple model based on a simple formula, and I explain it in this video right here.